Hello, everyone, and welcome to another edition of Your Daily 5 presented by StockCharts TV. I'm your host for today's show. My name is Grayson Roze, Vice President of Operations here at StockCharts.com, and it is so good to be with you for what I always like to say is one of my favorite shows to follow throughout the week. With Your Daily 5, you get a different presenter every day, a different set of charts, a different perspective on the markets. And of course, today is going to be no different. I've got a great set of charts for you, things that I am following for this current market climate. So we are going to waste no time. We're going to dive into my 5 picks for today's show. Now, as we typically do here, when I get to host this show, I have cheated right off the bat. I got to admit it. I know we're only supposed to pick 5 charts for the day, but I've actually got 6 in one here. But I am using StockCharts ACP. That is our new advanced interactive charting platform that you have available to you in addition to the traditional sharp charts. One of the very cool things that we can do with ACP is create these advanced multi-chart layouts. So I like to use this to actually follow multiple market indexes at once. As you can see, what we have here is a whole bunch of market index ETFs, actually. All of these are tradable. They are things that you can buy very easily, which is actually one reason that I like to follow this set of indexes, in addition to the standards, $ SPX, and things like that. What we have here, though, in this layout is the S&P indexes across the top. We have large caps with the S&P 500. We have mid caps with the S&P 400. We have small caps with the S&P 600. Gives us kind of a flavor of how the markets are doing across different market cap levels. Below that, we have the total U.S. stock market, which tracks very heavily, very closely to the S&P 500, tracks with those large cap indexes, but does bring in some things outside of that large cap index. Does bring in kind of the rest of the market down below. Still a cap weighted index, but an interesting one to follow. We also have the Russell 1000, which is another kind of large cap and mid cap blend. And then we have the Russell 2000, which is more of a pure small cap look. Now, what is fascinating about this set of charts right now is how we are all setting up at a crucial range. As you can see, we are retesting those June highs, retesting some levels that we've really battled against this year. All of these are actually year-to-date charts. Now, as of the recording here, this chart was taken actually last night, but we are getting a nice pop up and above some of these ranges right now. So a very interesting time. But this is something that I am watching really closely. This kind of look at these major indexes and how we're battling against these trading ranges. Now, if we get rejected here, if we get slapped back down, that is going to be a point in favor of the bears. And I think that we could end up retesting some of these lows from kind of mid-June across some of these indexes. If we do hold this level, break above some of these ranges and start to move higher, that is going to be an incredibly strong sign in favor of the bulls. And what's really going to be important is how we actually retest those ranges if we do. If we're able to get through some of these trading ranges and then retest them from above, we spent a lot of time this year retesting these from below. If we can actually break up through these ranges, retest those from above, and then get a bounce higher, that is an incredibly bullish scenario that I will be watching for. So watching all of these levels very closely right now. As you can see, it's just wild to see us really bouncing around in these ranges, not just at the large cap level, but across large caps, mid caps, small caps, the total market, the mid cap and large cap kind of blend index, and then that Russell 2000 famous small cap index. We're really testing some crucial ranges here with all of these indexes. Now, a couple other things that I am watching. First up is breadth. Now, this is going back a little bit further. What we're looking at across the top in all of these panels, we're looking at the percentage of stocks in the NYSE, the S&P 500, and the NASDAQ that are trading above their 200-day moving average. A strong measure that a lot of technicians use, of course, is that 200-day moving average. And we can package all of the stocks up from these different indexes, from those different groups, and we can say what percentage of stocks in these different indexes are trading above their 200-day moving average. We call that breadth. In this case, what we're looking at is I've actually drawn a line at 20%, which is kind of a crucial level in a lot of ways. There's a line at 50% here, and there's a line at 20%. What we can show here is that breadth number has been incredibly weak across all 3 of these groups, the NYSE, the S&P 500, and the NASDAQ. We have seen incredibly weak breadth, not just kind of, shockingly weak breadth, slightly weak breadth, that kind of thing. We're seeing somewhat historically weak breadth. What you can see as you go back a couple of years, again, this is kind of going back to 2013, 2014, what you can see is that when breadth gets down to these levels below 20%, as it has been, that is generally kind of the end of a move lower. We see that almost as a sign of capitulation, if you will. That is just an incredibly weak moment for these indexes. The real sign to buy comes as you start to cross back above some of those key levels. So we can see that we've got breadth numbers of the 200-day moving average sort of index for these three different groups. We've got that at 34% now for the NYSE. We've got that at 35% for the S&P 500. We're still in the 20s on the NASDAQ, but we've crossed from below that 20% threshold above that 20% line on all three of these. That is typically a sign of some good things ahead. Has been the last couple of times that that's happened. You can see that we've done that a couple times on the NYSE in the last few years. We've really only done that two other times on the S&P 500 in the last couple of years. One of those was 2020 as well for both of those. And then in the NASDAQ, again, we've done that just a couple of times, and those have turned out to be really close to the bottom for some of these moves lower. So something that I'm watching is in particular on those breadth indexes, the percentage above their 200-day moving average. Now, one other thing that I'm watching, sort of a good thing and a bad thing here, trying to figure out what to make of this. What we have with this chart is the put-call ratio up on top. And you can see that actually for the last kind of year and a half, we have been very, very, very complacent. Anything below that lower orange line is what I like to call the complacent zone on that put-call ratio. When we get above the top orange line, that's where we start to get really, really pessimistic. That means traders are coming into the market and buying lots and lots and lots of puts. Anything in between these two orange lines is kind of the neutral zone. So what we can see here is that while we are moving back kind of towards that complacent level, from put call standpoint, traders are kind of in the neutral zone here, which is good to see. In the lower panel, though, we have something called the NAAIM Exposure Index. That is the basically a measure of active managers in the market and how exposed they are on the long side. This is a survey that happens weekly. What we can see here is that when this is above 50%, that means that active managers, active managers are more than 50% of them are long in the market overall. Their overall exposure is on the long side. We actually haven't seen active managers in total, sort of in aggregate, according to this survey. We haven't seen them be more than 50% long since May. Active managers have really been on the sidelines, either playing the short side or in cash for many, many months now. We're just starting to see that tick back across that 50% level. So that means that active managers really haven't been participating too much in this rally that we've seen. More than 15% off the lows, according to some indexes. Active managers really haven't been a major part of that. Now, if we start to see that continue to move higher and active managers see us getting above some of these ranges and they say, hey, this means, I really want to get back into the markets. Things are strengthening. Things are getting better. That could be another sign in favor of the bulls in the sense that we're going to have some of that big money start to rotate back into stocks that could drive those indexes much higher. If these active managers, though, continue to sit on the sidelines or continue to play the short side, this could actually mean that rally that we've seen, that nice 15+% rally, is actually going to start to fizzle. So something that I am watching closely here. Could be a good thing, could be a bad thing. Now, of course, I am a stock picker, and I do always like to remind people that there are always strong stocks out there. Personally, I like to scan for highs at two levels, new 52-week highs and new all-time highs. So two individual names that have come across my screens in the last couple of weeks, making new highs, continuing to move higher. ADP is one here breaking out of a serious consolidation phase, but breaking out to new all-time highs. And as we can see in the top panel, outperforming the total market heavily. This is a beauty of a chart. Has actually remained relatively strong throughout the weakness that we've seen this year as well, has been outperforming the market for quite some time. So in addition to breaking out purely on price, this also has relative strength behind it. So a name that I really like to see here. Also with the 50-day, that red line crossing above the 200-day, that green line, this is a very, very strong chart. Has been, quite the run to the upside, maybe a little bit stretched. So I'd be watching this more for a breakout and then a retest of that level from the top, but definitely one that has caught my eye, one that I'm keeping a close eye on here, ADP. Another name that's come across my screen from those new high scans is Waste Management. A very similar story. We've seen a lot of consolidation in this name, bouncing up and down within a trading range, trading sideways, but now just starting to break up and out of that trading range while outperforming the total market. Again, a breakout purely on price, but also a lot of relative strength behind this name. That is something that I love to see. We're seeing that 50-day come up just towards the bottom of that 200-day moving average. So if we can see that crossover, we see this continue to move higher. Again, I may be looking for a breakout and a retest from the top, but this is an incredibly strong name that has definitely caught my eye. Another one that is making new all-time highs, even in a relatively weak market. That is something to note for sure. There are still strong stocks out there. There are still breakouts out there. So as long as you are keeping a close eye on your stops, you're maybe trading a little bit smaller, there are still opportunities out there for you if you want to play those individual names on the long side. So Waste Management and ADP, two names that have come across my screens this week. So I want to thank you for joining me. If you've had fun with me on the show today, you can check out my work in a couple of different places. Always love to connect with people on Twitter. So if you're on there, you can follow me at Grayson Roze with a Z. You can also check out either of my books, 10 Style Trading, the 10 Essential Stages of Stock Market Mastery, or Trading for Dummies. Little sneak peek, we're going to be doing a refresh on that at some point here. So keep an eye out for the new edition of Trading for Dummies coming next year. You can also follow me at stockmarketmastery.com if you'd like to keep in touch. But the primary way these days is on Twitter. Always fun to bounce things around with people. I'm always sharing charts, sharing things that I'm watching, sharing thoughts about the market. So if you're on Twitter, be sure to follow me at Grayson Roze. You can also follow me every Friday for more kind of stock charts, lessons and ideas, tips, tricks, tutorials, all that good stuff with Stock Charts in Focus. That's our product focus show on Stock Charts TV. We do that every Friday, 3 p.m. Eastern Time. Would love to join you for an episode or have you join me for an episode of Stock Charts in Focus. We really just kind of dive into every corner of the site, review new tools and features that have rolled out, and ultimately, as I like to say, help you get more value out of stock charts. That's our mission on that show every Friday. So if you want to get more out of stock charts, see some different corners of the site and the different corners of the platform in action, definitely join me every Friday. Stock Charts in Focus, 3 p.m. Eastern Time. Also up on our YouTube channel, and of course the on-demand platform at StockChartsTV.com as well. So thank you so much for joining me. It's been a blast to be with you here on your Daily 5 for another episode of the show. Hope to see you again soon. Stay safe, stay healthy, have fun out there. We've got a strengthening market. It's always interesting to watch when we get to some key tests as we have right now. So keep an eye on those major indexes. And if we do see some moves ahead of those or above some of those key ranges, things could get pretty interesting. We really could start to fly. So we will keep an eye on it. And of course, all of the analysts here on your Daily 5 will make sure that you're watching the right charts and staying on the right side of the action. So until next time, chart on, my friends.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.